please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to the last episode of Commodity Champions in 2017. I'm Manisha Gupta, and before we start the show, let me wish you a very happy and a prosperous new year. 2017 was an eventful year for the commodity markets. Cryptocurrencies became a household discussion point. SEBI gave a go-ahead for universal exchange in 2018, and the crude prices were constantly in focus. So let's start right there. After hitting lows in June, crude has rallied 42% to end the year near 18-month highs. The Brent has maintained momentum and rallied 16% in this year. This indirectly impacted the petrol and diesel prices in India, which shot up to a 3-year highs now. The global event that gave a boost to the oil prices was the voluntary supply cut undertaken by the OPEC countries and Russia to 1.8 million barrels per day. This deal was adopted last winter. The initial agreement was for supply cut till March 2018, but now the cuts will continue till the end of 2018. Notably, the lingering concerns of reducing fuel inventories persisted this year, with global fuel inventories showing a sharp reduction in this year. The global oil supply was also hit when terrorists blew up a pipeline in Libya. This led to a supply cut of 90,000 barrels per day from the African nation. Looking ahead, an event that the global investors are looking forward to in 2018 is the much-awaited IPO of Saudi Aramco. The world's largest oil producer, or rather exporter, will list on its domestic market as well as foreign exchanges. The U.S. shale production is expected to slow down in 2018 after nearly 16% gains in this year, whereas an improved demand in Asia, Europe and the U.S. will, and as well as the weak U.S. dollar, also gave a fillip to the prices. Moving on from the crude now to the metal space, and it was a good 2017 for metals, building on the gains that they posted in 2016. It won't be surprising if this momentum continues in 2018 as well. The supply side concerns continue, and coupled with production cuts by China as part of its crackdown on increasing pollution in the country. While demand will get a boost with the new tax plan of the Trump administration and an increased focus on infrastructure, the demand from conventional sectors has grown, and it will get another boost with new demand now rising out of production of electrical vehicles. Now to discuss this further, we are now joined by Kishore Narne of Motilal Oswal. We also have with us Fayaz Adani of Kotak Commodities, Ashish Shah of Sushil Finance, Prathamesh Malia of Angel Commodities, and Kunal Shah of Nirmal Bang Commodities. Gentlemen, hi, it's a pleasure to have you all. We've actually tried to get you all together on the same day, same half hour, to ensure that we can predict of what 2018 actually can come out as well. Kunal, let me start with you on that note. And what is your sense on the year gone by? I mean, we've seen options come in. We saw a couple of agri-commodity contracts back as well. But in a very short way, how would you summarize 2017?
Yes, 2017 has been a year where a lot of reforms have taken place. The baby steps have started to get implemented, and we have seen markets are slowly getting accustomed to it. We hope and we expect that in 2018 it should translate into big developments going forward. And yes, like PMS and other services are also awaited in commodities market. We are very hopeful, and we cross our fingers that 2018 we are finally going to see a surge in volume on the domestic exchanges.
We look forward for that too as well, Kunal. But Fayaz, coming to you, what is your sense on what really happened in the crude oil prices and the sector this year? And what is your prediction now for the coming year? Are we going to build up on these gains?
Well, what has happened, you have briefly discussed, and majorly the major producers have tried to ensure that the prices are sustaining above $50, and rather they are trying that it should go up. But on the other side, you have the US production which is going up, and that is actually capping the upside in crude oil prices. Well, saying that, for the coming year, we broadly feel that the crude oil range should be 50 to 65 for WTI crude oil with a buy on dip strategy. We are sure that the OPEC will still give it best to ensure that they curtail the supply in order to ensure that the prices are elevated in the international market.
Prathamesh, what is your sense? What levels are you watching out for the crude oil prices? Do you see correction from here, consolidation, or as many of the global bankers are talking about, of levels of 65, 70 on the higher side, do you see that much bullishness?
I think Manisha, 65 and 70 can't be ruled out in 2018, but taking into consideration the factors per se coming out of from US, wherein rig counts are increasing, production is increasing, it gives me a sense that correction is there on the cards, and hence I agree with Fayyaz's views. Possibly buying on dips is the right strategy when entering in crude. So I think even for me, 50-52 is the base for WTI, and in that sense, Indian markets would possibly be around 3,400-500. Higher side against $65, Indian markets close to around 4,200. So I would be buyer in dips on oil because it has gained almost just 11% in 2017. I think portfolio reshuffle would ensure that 2018 would be a year of oil.
And would you agree with that, Ashish? And what levels are you looking for there in case of the crude prices?
So crude oil definitely for me seems to be in a short-term bullish scenario. We've seen the fundamentals really been exciting. It's been a year of cuts, I would say, for crude oil, be it OPEC and non-OPEC members wanting to cut production this year and in the year coming forward. I think on the higher side, crude is likely to target higher till about $65 to $67. But if it sustains about 60, I think US production will start coming in play, and that will cap the gains. But on the as a range, I'm looking at $57 on the lower side with a buy on dip strategy, and $65 to $67 on the higher side.
So all of us do believe that we are going to see further gains coming in for crude. But Kishore, let me come to you for natural gas then. And while we started this year positive, the first half was good, the second half clearly wasn't. How would you look at the overall energy sector as we get into it? Whether it's going to be crude or natural gas, gasoline prices, distillates, what are the fundamentals that you would want to keep in mind?
See, Manisha, I think demand side, we've seen already that some of little bit of tightening, especially on the OECD side, the incremental demand growth. Even IEA is predicting the same thing. So even if you look at 5% incremental growth in the overall consumption levels, but the key thing is of course the supply side. So whereas the production cuts have been extended to the end of 2018, and the Aramco issue also will be supporting the prices. So we have understood that the market is being tighter compared to the 1 year back, and in the next 6 months it's going to further tighten as some of the inventories at the OECD level are going to deplete further. So it makes market much more tighter from here. So any supply disruptions, see, current spike is due to, as you already mentioned, that the Libyan pipeline going out of the outage. So basically, if any such kind of supply disruptions arise, as the market becomes tighter, the swing will be much more. So otherwise, if given that circumstances we don't have any supply side kickers, then the ceiling will be around $65. So I think next year range will be around 55, 57 on the lower side and 65, 67 on the higher side. I think that's the broader range I think most of the people are looking at. So I think that's where the market consensus is building up right now.
Absolutely. But not just the crude prices. We have seen almost everything gain up when it comes to 2017, whether it was the metals as a sector, precious metals, etc. as well. So Kunal, let me come to you with that question. What do you think is the best pick in the non-agro space within the sectors for 2018 now?
Well, it's going to be a year which is going to be very selective. 2017 has been a year where we've seen rally in oil, we've seen rally in metals, and precious metals have remained subdued. I think 2018, my first emphasis would be on precious metals. I think that the second half of 2018 is going to be very bullish for precious metals as and when the global economy starts heating up, which is already it is showing a sign of heating up. At that time, the inflation surges sharply and precious metal generally rallies during that time. So I expect gold to test levels of $1,400 or maybe perhaps $1,450 maybe in 2018 and or by the first half of 2019 looks bullish. Silver also looks bullish. You can see silver rallying to $20, $19.5, $20% on COMEX, and in India 44,000, 45,000. Gold India 31,000. These are the kind of levels I'm expecting. The general consensus is that since the equity markets are doing well and the interest rates are moving up, gold and silver will go down, but I don't think so. That has been completely factored in, and I believe that the inflation factor and even going forward, the slowdown post to end of 2018 will be factored in gold and silver. So that is bullish. Metals also, I'm very optimistic for outlook of copper. I'm expecting copper to test the levels of $7,400 on LME during 2018. Nickel looks very attractive. We have been bullish on this metal, and we are expecting nickel to move up and test levels of $13,000 to $14,000 on LME. And in India, it can test levels of 950 to 1,000 rupees. So since the global economy is pretty strong, metal also should do well. So we are bullish on precious metals and base metal, but we are not very optimistic about the outlook of crude oil. We believe that crude oil prices from here are not going to increase significantly. Brent, I think $70, $71 should top out, and then gradually it should go down. I'm not expecting a sharp crash, but I think it should peak out somewhere at $70, $71 for the Brent.
All right, so crude prices will do well, but in relative terms to other commodities, not so well there. Kishore, what is your sense? If you had to really pick up between all of the non-agro space, where are you putting your weightages on? Is it energy, is it precious metals, or is it industrial metals?
I think industrial metals should lead the pack. Of course, nickel is something which we are also looking at. I think that should be metal of the year. Though we have seen a lot of volatility in the last 3 months or so, with the EV theme coming up and again fading out. But believe me, there's a large amount of industry which is actually putting capacities for nickel-based battery technologies. So I think next 2 years markets will readjust to this new buyers coming in. So at this point of time, we still have a large inventory pile up. So approximately 20% of the global consumption is still in the inventory. So I think short term there is no shortage of metal. But as the market readjusts itself for the new buyer coming into the market, I think that would take nickel into another level. So maybe 1,000, 1,050 kind of levels. The second is something, again, aluminum is still going to be positive. Zinc should top out after first quarter or so. Again, we are not bullish on copper. So even we are within base metals, we are choosy. But I think we should be looking at overall financial markets globally should see increased volatility. So normally an increased volatility would drive some of the money towards precious metals. So probably there could be somewhere around 7-8%, and $1,400, 1,380, 1,400 could be there. So it's not a massive upside in precious metals, but 8 to 10% upside could be seen.
China has already banned a couple of their smelters from producing. The supply would be low for at least for the coming quarter, which is Jan to March, and probably post that we might see the supplies coming into the market, saying that the levels for aluminum would be 2,100 in the international market to 2,450. So broadly, this is the range where we expect the market to move with the bullish outlook. The second one would be, of course, copper. We still feel that copper has upside with the global economy doing good and expected to do good in the coming year, especially the US and the China. Both the places are showing relatively better growth. So that should support, and copper is the one which has always rallied with the global economy. With good upcoming economy situation looking better, we feel that copper should perform good. And as far as precious metal is concerned, we feel that the upside should be limited from a 8 to 10% upside, especially in gold, with the upside being capped at around $1,400 to $1,425.
All right, so precious metals and base metals both may be inching up. But Ashish, what is your sense? Nickel really seems to be coming up as the favorite pick across sectors. Of course, the EV story is something that would continue to play in as well. What are you looking at when it comes to silver? Because we haven't seen that perform at all. When you look at the overall non-agro sector, this perhaps has been the biggest laggard.
Yeah, I think rightly said, silver seems to be a commodity which ideally used to be the attraction for commodity markets overall when we have seen a couple of years back. But last 2 years or this year, silver has not given the gains which one should actually have expected, assuming the entire commodity rally. This commodity for me always remains a favorite bet as far as investments is concerned. But yes, the gains always are now going to be shrinking going forward because of the emerging factors which are affecting a multiple basket of commodities. So one is looking at silver. I think one can expect about a 20% to 25% kind of a return from this year close in the coming year. So somewhere close to 48 to 52,000 should be what I'm targeting. But I would always remain also a bullish on crude in the short term. So if I'm picking a couple of commodities besides nickel, I also would prefer silver and crude oil. But yes, the gains always are now going to be shrinking going forward because of the emerging factors which are affecting a multiple basket of commodities. So one is looking at silver. I think one can expect about a 20% to 25% kind of a return from this year close in the coming year. So somewhere close to 48 to 52,000 should be what I'm targeting. But I would always remain also a bullish on crude in the short term. So if I'm picking a couple of commodities besides nickel, I also would prefer silver and crude oil.
And crude oil are the top picks coming in from Ashish Shah. Prathamesh, what is your sense? What are your top picks if you would want to lay them out in a 1, 2, 3 order?
Aluminium would be the first bet I would pick for 2018, taking into consideration all the steps taken by China, smelting capacity is reducing down. I think aluminium would be the biggest bet possibly. It would rally by almost 30-35% from here on, but I would again be a buyer on dips in aluminium. In that sense, the second commodity that I would pick is crude. Again, as I said previously, $65-67 is what we're looking at for crude. Indian markets again 4,200, 4,300. So aluminium and crude are the two picks of 2018 that would be bullish at.
All right, so crude oil, of course, would continue to build up in metal space, aluminum and nickel, and gold and silver is something that our experts also want to be associated with. Gentlemen, stay on with us. We have spoken about the non-agro space. We will take a short break. We come back and we will also get you the top picks that our expert panel thinks is good for you in the agro sector as well. 2018 special, we have a discussion now coming in for the agro commodities. Remember, it has been an year where you saw a bumper back-to-back crop coming in. It has been also an year where you have seen many of those commodity prices trading below MSP, farmers' protest, unfavorable weather have been various things that marred the agro sector in this year. Kunal, starting with you, what is your sense? How do you look at the year and what would you really want to bet on long or short when it comes to an agri pick for 2018?
Well, before I go into the agro contracts, I think in 2018 the focus should be in how to increase the volumes on the Indian commodity exchanges. So India's journey from $2.5 trillion economy to $5 trillion economy, it is going to be very commodity intensifying journey. So all the commodity users or the entire commodity ecosystems need the commodity exchanges. And in order to have a better hedging platform, there has to be an emphasis like how to increase the volume. And one of the moves which I personally believe can really help a lot is lowering down the commodity transaction cost. That will encourage the jobbing and arbitraging community and increasing the volume. So the new contracts, whichever is launched by exchanges in agri or non-agri, that will lead to a better and better volume growth. So that is one thing, and we are expecting that next year in agri commodity, one should watch out for commodities like guar seed, where US oil production is going to move up. So guar prices can rally to almost 4,500, 4,600. We are bullish on soybean complex oilseed sector. We believe that during after 3 to 4 months we are going to see a good rally in prices of soybean, and rest in pulses, even chana looks attractive from present levels. We are not expecting any sharp downfall from here.
Well, chana really hasn't had a very good year, 50% down in sense of prices in 2017. Fayaz, what is your sense? Where do you see a support come in? One, for that, and two, what are your favorite picks on agri?
Well, Manisha, it's always difficult to find out a support in chana. Over the years, we have seen that whenever we feel that, that 5,000 level should hold, and probably after a few weeks, we see that the price are already at 4,000. Well, saying that, we have been studying chana lately, and we feel that 3,200 to 3,500 is a level where historically in the last 4 to 5 years, the market has taken decent support from the spot perspective. And we feel this year also that level should hold 32 to 3,500 per quintal. And this is the support level which we are watching for. Saying that, we are not extremely bullish because there are a couple of measures which has been taken by the government, be it the increase in minimum support price, you know, the allowing of exports, the increasing of import duty. All these reforms were positive for the market, but the impact has not yet been seen onto the market. So probably the market will take some more time, or probably there is still some downside remaining before we see some recovery in chana. So the broad range should be around 35 to 42 or 44 for the next 3 to 6 months, I would say rather. As far as agri-commodity is concerned, the first pick would be turmeric. The stock is down by almost 30 to 40%. Not to forget that it is a 9-month crop. The prices has been subsided under pressure for last couple of seasons. The farmers are really not motivated for turmeric sowing, and that should be bullish for the prices in the coming season. To give you the level, we feel that 7,000 is a good level, a broad support level. On the higher side, we are looking at 11,000 to 11,500. That's the first pick. The second one is guar seed. Again, the production is down. The stock is relatively down. Kunal has already touched the crude oil angle. So broadly, guar seed is bullish. The broad range which we see is 3,900 is a good level to go along. On the higher side, 5,000 is the resistance which we see, and with a support level, or rather I would say a stop loss of around 3650.
All right, so guar is a common thread, but there are other commodities as well. Kishore, what is your sense? How would you look at the agri sector to start with in 2018? What more measures from the government are needed, or is it about implementation? And finally, of course, your topics as well.
Manisha, predicting agri is really difficult because every season is different. We don't know what is going to happen for the monsoon, how it's going to plan out. So let us keep it simple, because if you are looking at global commodities like soybean or mustard or oilseeds, there is a global glut. There is a global glut of sugar. There is a global glut of wheat. So I think there you will not have much opportunities. You can say that soybean is at a rock bottom level where one can go and safely buy, but still when there is a global glut, don't go against the markets. So I think there are few commodities like guar where our colleagues have mentioned that it's an India-specific commodity. You can't produce more than that. But again, there is a large capacity which is overbuilt there. So I think chana is a safe bet. Again, chana being a Rabi crop, you have another couple of months for the new crop to come out. So first 4 months, it will be still depreciative on things. So this time, as the harvest comes in, it's better to buy chana at that point of time. So otherwise, wheat is still looking decently positive. On larger commodities, wheat is looking good. So maybe you can look at 1800 plus in wheat. But these are on the derivatives front. These are very small commodities. Jeera has seen a massive rally. So I think that's where somewhere the turmeric would try to catch it up. So I think turmeric, guar, and to some extent wheat, and chana maybe in the second half is something which I could look at. But again, just a disclaimer, predicting agri-commodities without knowing what the sowing is going to be, it's a wild guess.
Oh, well, absolutely. Global commodities, weather, Indian reforms, and of course, measures, forward trading. There is just so much to watch out for when it comes to agro-commodities. But I take your point that guar is something to keep an eye on, and we have some clarity on that because of the indigeneity of it, because of the Indian markets there. Gentlemen, we'll let you go at that. Thank you so much for joining us, trying to make those predictions for 2018. And this is wishing you a very happy 2018 from all of us at CNBC TV 18.